Well, welcome everyone. It's so good to see you on this Wednesday afternoon. Um, I'm just very honored to be here and share this panel on innovation. And as I was preparing for this panel, I was really thinking about, wow, energy innovation is really at crossroads, right? Because on the one hand, we're having unprecedented energy demand growth, which hopefully is an accelerant for energy innovation. But then we also are looking at AI, which can help us accelerate, but can also be a risk factor. We're going to talk about today record-breaking IPOs in the energy innovation space, but project developers are facing real headwinds. And then finally, as we talked about at dinner last night, we're seeing lots of competition internationally. So I'm very excited to welcome everyone here and my panel to this important conversation. Can I just see a show of hands from our audience? Who has used AI today? Okay, not everyone. Um, and who's optimistic about US energy innovation? Okay, well, the panel is all in. All right, let's get started. It's wonderful. I have here David Livingston, Chief Strategy Officer at Galvanize, Kurt Kelty, Vice President for Batteries at General Motors, the Honorable Connor Prohaska, who's the Director at ARPA-E at DOE, and last but not least, Eric Rubenstein, who's a Managing Partner at New Climate Ventures. So let's dive right in. I want to start with you, Connor and David. We had really exciting IPOs recently, X Energy, Fervo, nuclear, geothermal. Both of your organizations were involved. Can you tell me a little bit more about how you were involved? How did you choose the companies? What are you most excited about? Connor, please.
Sure, happy to. Thank you very much for the Atlantic Council having me. This is always exciting to talk about energy innovation, which I think has always been something that the United States has been powerful at. I just don't know if we've always had the reason to flex the muscle, and now we do. And I'm very happy to say it hasn't atrophied too much, and we've got a lot of great opportunities ahead of us. But in particular, with those two, X Energy, a fission company, fission fuel company, and then with Fervo, a geothermal company, we were very happy as ARPA-E. We don't run a portfolio like a VC. We don't invest. And once we put a little money in, we hope that they are successful as possible, but getting a couple of three unicorns. We actually had three unicorns this month between those three past performers, which is indicative, in my opinion, to our extremely talented program directors and our extremely talented tech to market advisors who are responsible for safeguarding the U.S. taxpayers' investment in these opportunities. And one of the things that we look at ARPA-E, which is goes without saying in the private sector, but at ARPA-E, unlike many government agencies, we ask the question: if it works, will it matter? Is this going to get to the consumer? Is this going to improve the way that this field transformationally operates, not just on the increments and not incrementally and not just on the edges, but really moves the industry and the field forward and has a path to commercialization to fundamentally help the US consumer, help the world in the technology world, because these things naturally find themselves everywhere in the world and really helping to improve human lives, which is one of the things we all are excited about. So it comes down to a number of different metrics in a model that's worked for 17 years at ARPA-E, and we've got many stories like this. But I'll hand it over for the investment side of it, of people that do get equity in it. So
I mean, it's a great. The director's comments are spot on. It's a great example. Both these IPOs are not just one-time events. They are actually the culmination of a very long journey that starts in the thoughtful use of taxpayer dollars in national labs and in places like ARPA-E. Government programs, and ultimately ends up with a liquidity event as it enters into public markets. Quickly, let me just sort of say where we come from. Galvanize is a multi-asset class but single thematic investor. What does that mean? Every part of our business, every part of our asset management platform is focused on energy transition, energy and industrial transitions, and finding bottlenecks where solutions providers, technologies, assets, pieces of infrastructure can help us to debottleneck needs that we need to scale up secure, affordable, sovereign, abundant energy. Um, we are, one of those strategies that we have: growth equity and venture capital. We've got real estate, public equities, credit and capital solutions, as well as a seed and pre-seed strategy. In our growth equity and venture capital strategy, we're proud to be the only firm that was invested in both, on the cap table of both X Energy and Fervo. Very different technologies. One, a small modular nuclear reactor developer, and the other, obviously bringing the lessons, technologies, techniques of the shale revolution to clean, abundant, always on geothermal energy. But some similarities between them, to your question, Lee, I think that resulted in the successful and frankly historic IPOs that we saw for both of them. One, the largest nuclear IPO in history; the other, the first enhanced geothermal IPO in history. Both of these companies had incredible teams, were laser focused on, again, delivering something to the market that was solving a real need, not just something the US should do or that consumers should buy, but a real need. We're addressing a bottleneck in the system. I will note, optimized for, frankly, the demand profile we see from data centers and the drivers of load growth today. And critically, worked in partnership with key industrial strategic players that would anchor the demand and frankly the scale that's needed behind both these technologies. In the case of X Energy, that's Dow Chemical and Amazon, among others. And in the case of Fervo, that was Google, Southern California Edison, a utility down in Southern California covering parts of LA, and others. And so for us, we are delighted to be able to work and sort of dance in some ways and build on the platform that public institutions have provided to try and take these technologies to scale, bring them to public markets, and turn faster the flywheel of capital innovation that'll deliver what we need.
I would just add one thing, that we, in both, we're talking roughly $5 million at max for both of those companies early on in their early days. And sometimes it's one obstacle, and it's not the whole kit and caboodle that we're trying to solve. And for both, for the type of fuel that X Energy wanted to use and some specific downhole technologies that Fervo wanted to use, we were able to identify that's the choke point, that's the issue. And we feel like that's our role because without the holistic play, it's tough to convince venture capital or industry partners to join in with these teams.
Yeah, and thank you both for explaining to us how kind of this value chain works in terms of innovation. I think what you just said is really important. Often to move technologies further down the development road, there's really laser focused government and intervention in the positive sense that is de-bottlenecking, de-risking one specific aspect. So I think that's a very insightful detail that you shared here. But I want to go to you, Eric. On the prep call, you told me that over the past couple of years, the ecosystem in the US has completely changed when it comes to advanced energy tech investing and the number and diversity of companies that are available. Can you tell us more about that side of US innovation?
Yeah, absolutely. So at New Climate Ventures, NCV, we invest in the new industrial revolution. And 5 years ago, Fervo actually was too far along for us to invest. We're early stage investors. So we're kind of in the middle of when ARPA-E would participate and alongside them invest in companies as well. And just before when Galvanize typically would come in. But if you look 5 years ago, there were far fewer companies that were investable, even at the early stages in the United States. A lot of what we were looking at was in Europe and in Canada. And as the arc of time has evolved these companies, we are finding far more opportunity. So we're in almost 40 companies now. And of that, about probably 80% now are US based. And that's become more and more US based through our investment cycle. So we are very excited about the U.S. technologies and where the U.S. is going as a leader in developing these technologies, where we're finding more in the U.S. now than we did previous years. And the U.S. will be a leader in energy technologies as a result of that.
Great. And I want to come back to what distinguishes the US, say, from Europe and Canada and the reason why this portfolio is moving this way. But before I do that, Kurt, I want to go to you. I heard you joined us here at the Global Energy Forum only today because really important announcement yesterday. Really exciting. Can you tell us all about it?
Sure. Yeah, we yesterday in San Francisco we announced that we're going to be producing sodium ion cells for the energy storage market. So this is we're working closely with Peak Energy. We've made an investment in them, and sodium ion is the way we view it is it's leapfrogging the LFP technology, which is the incumbent technology used really throughout the ESS industry. The advantage that the sodium ion cells have is, well, the cells that we've developed with Peak is that the they'll operate at high temperature without degrading. And what that gives you is an ability to build a system that's passive. Having an active system where you've got pumps and you got motor, you got pumps and you got connections, those end up failing when you have a 20-year product. And so what we can do with Peak Energy is develop a system that eliminates all the cooling system, and you end up with a product that, even though the sodium ion is more expensive than LFP, and even though the energy density is lower than LFP, if you look at the total system, it ends up being lower total cost. And that's the really exciting part, is that we can have a system that's lower total cost. You can have a chemistry that can rely on a supply chain based in the US, because sodium is plentiful around the world. It's basically table salt. So we've got the supply chain that's here. And the other thing is, there are other advantages, that it runs silently because there's no active cooling system in it. The round trip efficiency is better. So a lot of advantages. So we're really excited to announce that yesterday. And it's just a kind of an extension. We've been in the energy storage market for the last year. We entered it last year, taking our second life batteries from our vehicles, working with Redwood Materials, and putting those into data center backups. So we've got about a 50 megawatt hour system in Sparks, Nevada, for a Crusoe data center. And then we're going to be backing up our own factories later on this year with some other installations using our second use batteries. So a lot of things we're doing in the ESS market that pretty exciting.
Great. And I heard data centers, which is in everyone's mind right now on the energy side. The other thing that we've talked a lot about at the GEF here is obviously the global energy crisis we find ourselves in. So maybe Eric, I'll start with you. What do you expect the impact from the crisis to be on innovation? And also, I think on the other hand, how does the U.S. market distinguish itself with regards to our energy demand growth from the rest of the world?
Well, we could talk for an hour just about that. But looking at the energy crisis we have now, in, I guess globally, originating with the Strait of Hormuz, like if you predate before then, there was already a trend toward countries and companies wanting to onshore technologies, and maybe this kind of spawned from COVID and the repercussions there of supply chains that were disrupted. But if you look at supply chain resilience, energy security, these are things that a lot of companies and a lot of countries have on their minds. This is just accelerated by the high prices that we're seeing today in natural gas and oil, and will continue to be. But what we're seeing now is more interest in technologies that can be locally deployed, that do separate from local or international supply chains to the extent that they can, and that can produce unlimited power in some instances, locally. So it's a lot of interest in taking local waste products that can produce energy or can produce plastics and other things to be happening right there locally to separate from these supply chains.
Yeah, and Connor, maybe to you, what is ARPA-E doing to localize supply chains, but also potentially, how are you thinking about this very unique moment, energy demand growth on one hand, energy crisis on the other?
Yeah. So when we think about what RPE's always trying to tackle, but particularly now, and this is my second time at RPE. I was chief of staff in the first Trump administration, among some other positions. But one of the things that's unique about the time and place we're in is it's very clear we understand the demand that is coming at us and what is coming down the tracks. And we know there's certain technologies that can significantly move the needle to help us generate what we need. Now, let me say one thing is it's not just generation. We've got power here in the United States. I go back to the Winter Storm Fern. People did not lose power in Winter Storm Fern because of lack of energy coming down the pipe. About 1 million households lost it because of trees down, primarily in Nashville. But it was a colder, longer, and more intense storm than the one that hit Texas a few years ago. And we didn't see the types of energy issues, a large part because of what President Trump and Chris Wright, Secretary Wright, have done with 202Cs and things like that to make sure that we're keeping electrons on the grid instead of detracting. So, one is what can significantly move the needle? We think it's fission, fusion, large scale geothermal in particular, utilizing AI, because it's not just going to potentially hurt the grid, it can help the grid, from load balancing to making sure we've got new types of materials for transmission. And then also at RPE, we're talking generation, we're talking DC Grids, which is our grids company on our, excuse me, grids program on how to strengthen our existing grid capabilities. And then also on the efficiency side, for example, at RPE, we've got the program Cooler Chips, which is looking to take what is now roughly 30% of power into data centers goes towards cooling. We want to bring that, and because we're RPE, we set the audacious goal of lowering that to less than 5% of the energy used at data centers for cooling, which fundamentally changes the demand. So it's not just one silver bullet, it's all the innovations that exist and all the different ideas. And I'm blessed to be in the catbird seat and listen to all those interesting ideas that are going around in the United States energy innovation ecosystem and technology ecosystem, because it's all interconnected. And I'm very, very excited about what we're hearing and what we're seeing.
Yeah, and I want to challenge you a little bit, or have a little challenge question for you, because what keeps me up at night, the FT last week titled, I think there was a poll globally, the US leads the world in AI data center backlash. And if we're tying a lot of innovation to that build out, are we, do we need backup options? How are we making sure we're still going to innovate, still going to bring the technologies to market, even if the energy demand growth doesn't materialize? Eric, you were ready to jump in.
Yeah,
Connor?
I mean, I just to echo everything you said, like, yes, our grid, like we've returned to power demand growth in the last couple of years. It's not just data centers that are causing that, right? And that's, I think, the main point. Data centers are the fifth largest growth segment in the demand sector for power right now, or in the, in the forecast for the next number of years. So when you think about it that way, while these are all picks and shovels for data centers that are being talked about, they are also the picks and shovels just for our entire grid infrastructure. So where data centers become very meaningful is where they are the speed to power. They need the power now because for them, every day, every hour that goes by on a 1 gigawatt data center, they are making $1 million an hour. So for every hour that goes by, it's money that isn't made. So they want the power on yesterday so they can make $1 million an hour yesterday. And if you can get that on fast, then you can strengthen our grid by bringing the power on behind the meter while you're waiting on the connectivity queues in order to finally connect to the grid. And ultimately, if we do have advances and breakthroughs in chip technology and softwares that can 10x and 100x the compute power without needing to increase power, if you can have cooling technologies, like we have companies that can make AI data center cooling fluid from carbon dioxide even. And when you have things like that, you're using a plant that's emitting right next door to feed into the data center to cool it and reduce that energy need, and it's not water based, then all of a sudden you can change the entire supply chains and have it localized, but also connect to the grid once that power is not needed by the data center 5, 6, 7 years out.
And I'd say the the power demand, the energy demand, is a parallel indicator to economic growth. You show me a country that has stagnant power demand, and I'll probably show you, almost guarantee you, I'll show you economic stagnation as well. And to the point there, those picks and shovels aren't just AI. This isn't just power for AI, it's power for the country and power for the world. And at the end of the day, the ones that are picks and shovels going into the ground to create a data center, At the end of that data center, there's a user doing it for some diverse industry that's not just AI, and they're going to grow their industry because of the tools that AI are creating.
Great, thank you for this. I'm going to turn with my challenge questions to Kurt and David and to Power for the World. David, we talked about yesterday at the Atlantic Council in Romania dinner on innovation as well, about the need to be clear-eyed about competition from abroad. 94% of nuclear reactors that have started construction over the past 10 years were either Chinese or Russian design. 47% of clean energy exports from China are going to emerging markets. Do you think the US is competitive in setting up its clean tech innovators to export globally?
I think there's a very differential story across different supply chains and different energy technologies. Again, I'll say at Galvanize, we're not just backing a nuclear development, company and technology innovator like X Energy. We also recognize that U.S. needs to invest much more in the fuel cycle and the full nuclear supply chain. So we're invested in a really great, interesting company called DISA Technologies, located in Wyoming, that has the only NRC license to recover uranium and other critical minerals and rare earths from mining tailings across the western United States, including on Navajo Nation land, where you can improve the environment, do environmental remediation, and actually recover critical inputs like uranium into our nuclear fuel cycle. We're also looking at investments in the nuclear enrichment space, because we realize that one of the key bottlenecks isn't just the fuel, it's actually the enrichment capability to provide HALEU and LEU for our nuclear fleet. We're seeing actually, there's a common trope that we're completely dependent on China for batteries, renewables, solar, et cetera. You're actually starting to see uh, 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 if you disassemble those supply chains, you see actually really great stories in the U.S. as well as U.S. and allied countries across many parts of those supply chains. The continued efforts across administrations are delivering much higher U.S. and allied content when it comes to modules and now cells, some parts of ingots and wafers and solar, as well as in batteries. And so I think there are a lot of impressive efforts underway in terms of investment in the supply chains. The other thing, though, that I would mention too is something we can't lose sight of is this isn't just about a technology we need to invent when we talk about breakthroughs as a headline. It's also the boring work of, frankly, deployment decisions that too many countries and too many societies have deferred for too long. And a lot of that is in the sort of the boring but critical middle: grids, transmission, transformers, demand response, grid flexibility, inverters, right? The sort of the boring, prosaic, but incredibly critical middle that also, by the way, is sometimes some of the most national security sensitive, as opposed to raw commodities just like polysilicon or ingots and wafers, we really need to focus on as well. The operating system, let's say, of the 21st century grid, the 21st century energy system that we need if we're going to meet our AI goals, if we're going to meet our reshoring and manufacturing goals, if we're going to meet our electrification goals. And so some of the breakthroughs, frankly, and some of where the capital, we need more capital to flow, is on that controls layer, that operating system of the 21st century energy economy, that all these different specific technologies are going to get, built upon and deployed upon.
Yeah, when you're talking boring middle, I was just thinking about the FT again, writing about BYD investing $2 billion in ultra fast charging for EVs in Europe. So, um, in any case, Kurt, let's go to you. GM, really, really exciting work on battery and domestic capacity. And so, what's your thought on how can the US and what is GM doing to help the US be competitive in what's really a global battery race?
Yeah, the idea that boring and batteries are in the same sentence like kills me. No, batteries are they've come a long way in terms of excitement. I used to go to cocktail parties and I was the one nobody wanted to talk to. I was the battery guy. But now I'm really popular. Yeah, there's a lot in so in batteries. We've invested tremendously at GM. We've invested over the last 4 or 5 years about $900 million in our R&D capabilities. We've got now basic R&D, we've got prototype lines, and then at the end of this year, we're going to have a pilot line that can do a half a gigawatt hour of production there. And we're last year we announced this LMR technology, lithium manganese rich technology, which is going to leapfrog LFP in vehicles. And then we just announced yesterday the sodium ion, and the same thing where we're trying. What we're doing is we're trying to out innovate the competition here. The If we just go down the same path as what China has done with LFP, we're not going to be competitive. They've got there's a supply base there that's very strong. We need to develop something where the supply base is more domestic focused, and where we can really compete in performance with energy density and in cost. The BYD announcement's interesting. So they came out with this about 3 months ago or so, where they said they can charge ultra fast charge down to 6 minutes, 7 minutes in that neighborhood, and they get really great energy density and it's cheap. Well, it turns out those are multiple cells. If you end up talking with them, it's not one cell, it's multiple cells. And the because in batteries are a bunch of trade-offs. You can get fast charge, or you can get really high energy density, or you can get low cost. You can't get all three. And so we can also do a fast charge if we wanted to do a 6 minute fast charge like BYD as demonstrated. We can also do that. It's a matter of designing of the cell that way, and you're going to have a lower range vehicle or a higher cost vehicle. So the that there was nothing revolutionary in that, but that is the direction that the market is going. There is demand for faster charge, more convenient charging, and that's one of the things that'll really help the EV industry is if we go down that path. So I like the direction they're going, and if we saw a need for it, if we saw a demand for it, we would also come to market with that.
Yeah, and I didn't want to say that it's boring. I think it's quite exciting because when I lived in Europe, it was pretty tough to charge your EV because the infrastructure across borders is quite difficult. But um, I think what you're talking about is really exciting. So, can you tell me more about what if you had a magic wand and could have any support from the government, from capital markets to really, or even from consumers to accelerate this build out? What would it be? What would you like to see? What would be helpful?
Boy, at the for the government level or the country level, the biggest thing that would be helpful, I think, is electricity supply is absolutely critical. In driving that cost down, it's a big driver. Cost of capital is also a real big driver. I would say though the biggest thing that we need right now as an industry, the battery industry is really struggling right now because the demand has dropped for EVs. And we had this massive demand that appeared we had massive demand about 2 years ago. So everyone was ramping up. We all built factories all over the place, including GM, and they're not. They're a lot of those are empty right now, which is really unfortunate. But what we need more than anything else is demand. If we had demand for batteries, that would drive the industry in it to make it really competitive. And whether you do it with EV, I mean, the challenge is that demand, EVs are the biggest market. We're forecasting a terawatt hour of demand just 2 years ago. To put that in perspective, the ESS market, which I was just really highlighting, is a great growth market for batteries. That, in its best case, in 2030, will be at about 100 gigawatt hours. So 1/10 the size of what we're expecting the EV market to be. So it's really important to figure out how we build the demand for EVs, and that will really help save the battery industry here, which is the battery industry really is a national security issue as well as an economic security. We need a domestic battery industry right now. The so Demand, and what we're doing at GM to try and help that is we got to drive down costs. We recognize it's not just that the $7,500 incentive disappeared last year. That's part of it. But the biggest thing is we need to build more economical, better performing cars. We've got 12 EVs on the road right now, and we are showing the leadership in EVs. We're number two market share, growing year after year. So we're really doing very well in the EV market, but we've got to do better. We've got to continue to drive down our costs and continue to make compelling vehicles.
Did you want to add anything?
I guess
Just that there's a triple, I'll just say there's a triple win there, right? The more EVs we get on the road, the more we, as I think this administration is also kind of coming to recognize, the more we drive energy affordability, we lower oil prices, we have more crude available to export to allies and to global markets. We drive more demand for batteries, which it should be mentioned is also part of the same electro tech stack that services drones, robotics, automation in our national security, and defense sector as well. So there's really a triple win there, and it's right now is a very timely moment, I think, globally, to that throws that fact in sharp relief.
Yeah, but where you have seen a lot of growth, though, is in industrial batteries and batteries in homes for backup and reliability. So there has been that growth sector that's been happening for batteries. And you mentioned low oil prices, which we happen to have relatively low oil prices today versus a few weeks ago, even. But as we look forward here, oil prices should remain high for a decent amount of time because of the low inventories that are out there right now and the drawdown that's continuing from the Strait. So there could be, I mean, I would expect that we're going to have EV sales increasing in the near term as a response to high gasoline prices. So maybe you'll get a boost here at least in the near term, and we'll see how sustainable that is.
Yeah, I would just add that, there's two pieces to that, and you hit one at the end, which is, it's not just the going away of an incentive. Prices need to be as palatable as possible for the American consumer to make the choice that they want to make. And then the second piece is all of that infrastructure still drives a need for infrastructure and a need for electrification in a lot of things that we're doing. Those still need to be generated somewhere, still need to be transmitted, and still need to be accepted and used in the efficiency. And we do agree that the industrial scale batteries is an industry, and industrial scale and also home batteries. There's a market there that people are looking at, and particularly industry when we talk about even AI centers, looking at those as potential wins for them. And so it's an interesting circular use of this.
Yeah, and I think, unfortunately, as usual, time is flying by on these panels. But we've really taken a good look at where US innovation and energy is now. But I would love to spend the rest of the panel thinking into the future. So, you know, your on your desks is the next major breakthrough. So what is it? Tell us all about it.
Yeah, well, we hope it is. We want to keep pressing forward with a number of different things. Whether it's what we do at RPE, I like to say, is the unknown, the unexplored, and the unbelievable. And these are things that we look at what the scientific community, what our colleagues at big DOE are looking at, what our colleagues at other agencies and research agencies, both big at private companies like GM and also investors in the private sector. And we look and say, okay, well, what are we missing here? What's not being looked at right now? What type of fission fuel is not being looked at right now? I always love to use the example of fusion because about 12 years ago, ARPA-E looked at the fusion landscape and it was really two big buckets of sovereign projects. It was tokamaks and it was inertia. And we said, well, what if there was another way of doing this, such as Z-Pinch technology? And we founded the Alpha program. And out of that program and the subsequent three programs that came out of that, a whole private fusion industry has emerged here in the United States, which is something that was in a lot of ways unbelievable, but also it was unexplored and unknown. And when we did that, we not only created private companies, but we created an ecosystem which with they could survive and exist and get to where they are. We spent over the past 12 years and invested over the past 12 years at RP $134 million. That's resulted in a number of companies. There's actually a fusion industry association now, which again, 10 years ago, people would not have thought would be possible. And it's led to $1.5 billion of private follow on funding, a very good kind of stamp of approval from the private sector that we were making good calls. So me personally, I look at that and I'm a simple Texan. I just add $1 more million to that and say, let's go big. So we're going to commit $135 million from ARPA-E, which is still not huge money, but that's part of the awesome part of ARPA-E. We're not throwing billions out. We're throwing strategic, well-placed investments in certain areas. And we're going to commit to $135 billion to the fusion industry in the next 18 months. So we did 134 over 12 years and got to the point I just talked about. We believe that we can fundamentally change the speed in an exponential way of fusion power being real and changing the world, which is really, again, what motivates us at the Department of Energy, what motivates Secretary Wright, is we're doing all this work because, yes, we find it interesting, but there's an altruistic point to it, and it's service to our fellow person and fellow man. And so we're excited about that at RPE, and we're looking forward to see what the outcomes are going to be in just a few years.
Yeah, what's your estimate? First fusion power on the grid?
Yeah, that's a tough one because there's certain companies who have said what they believe. If it's 2030, I don't know. I think we're going to see a very similar glide path, not a glide path, but increase in action as we've seen, particularly in SMRs, right? For a year ago, when President Trump put out the 4 nuclear EOs, and part of that said we are going to have criticality on 3 by July 4th, 2026. I was part of the process going back and forth at the White House, and our team at DOE said, absolutely not, that we just can't do that. There's no way. We're going to do it. We're not even going to just do it with 3. We're probably going to do it with 4, possibly 5. That was unthinkable just 18 months ago. And so I believe with the new fusion roadmap that the Office of Science just announced yesterday for big DOE, our commitment, I think it's going to be sooner than we think. And I believe that for quantum, by the way. I believe, again, that the tool of AI is going to help drive all of these things much faster than we even think now.
Okay, well, July 4th, what a birthday present for America. Eric,
We already have one. One went
I
critical
know.
just last week.
Congratulations. I think it's a remarkable achievement. It's very necessary, but I know we're running out of time here, but so I want to quickly, David and Eric, if you could have one wish from the government to accelerate innovation with Connor here, what would it be?
I don't get to wish them for anything.
What's it? Okay, we'll do a lightning round for everyone. What is what's your wish to the capital markets and the private sector and everyone else's wish for the government?
We'll make it an energy white elephant party.
But yeah, no, I mean, we're doing the job of investing in the companies that RP is supporting. So I think, from both of us, like that's how we're helping. But what we need help with, I think, is making sure that there's enough funding for the first of a kind projects that are happening and making sure that those can be bankable in the future. A lot of the corporations need to see these technologies at a scale that's meaningful in order to sign up and actually spend billions of dollars building plants. And finding that first money is like Fervo, as an example, again, out of Houston, has done a great job of being bankable. But not all companies are there yet. And that's where that arc of time is kind of catching up, where we're in the years to come here, just in the next few years, going to see more and more of these technologies being integrated into plants and scaling. But we need more and more money to do that. And I think that would be super helpful.
And I think we don't, in many areas, we don't even need more government funds. What we need is more private capital to just be deployed. We're in the business of trying to generate very, very great returns for folks' pensions, for college endowments, et cetera, right? That want exposure to this space and this narrative and this story, and these bottlenecks that are getting debottlenecked. But one of the things that would be helpful in that, frankly, as a general appeal, is to both sides of the political spectrum to dampen the pendulum swing, and to have more policy continuity. A abundant, affordable, sovereign, secure, and sustainable energy system should appeal to just common sense, and every citizen, both of the United States, but also globally, and to the degree that we can all do our part in dampening that pendulum swing and providing long-term vision. I think that's how we're going to get to where we want to go.
Yeah, and with $50 billion of clean energy projects canceled, innovative projects canceled up to now, I think that's a very good appeal, and I can second that.
And I will third that. I mean, the biggest thing for us is stable policy at the government level, where the a specific one, production tax credits for battery manufacturing was in the original IRA bill, and it's been extended to 2032. But if we don't extend that, I mean, if we don't extend that in the next year or so, we're already making decisions now about investment in that time frame, because it takes 3 years to build a battery factory and the returns on it are over the next 10 years. So we are at that point that we've got to make a decision. Are we going to extend that? Because if we don't extend that, we're not going to be competitive here in the U.S. in battery manufacturing. So the production tax credits and tariffs, both of those, we can't have it just switching every time there's a new administration in place. You can't make long-term investments that way. So that would be my biggest wish. I know that's not your department, but that's
Well, my simple wish is to continue to partner, because the government can't, should not, and shall not be the one that's going to get this all done on our own. We have to partner with private sector industry, with academia, with our colleagues across the spectrum, because the glory of the United States is our private sector, the initiative, the intuition, and the capitalist operation and experiment we have coming here in the United States, and we can't do it alone. And so, continued partnership with ARPA-E and with the multiple other things that we're doing at the Department of Energy.
Amen.
All right. Well, gentlemen, thank you so much for this really exciting conversation about innovation. To your point on infrastructure timelines, I hope we can meet again, maybe at the 65th birthday of the Atlantic Council and the 20th Global Energy Forum, and where we'll have lots of nuclear, geothermal, first fusion, hopefully not more than first fusion, and many more technologies, as well as lots of EV uptake. So thank you very much. Thank you to the audience for joining us. And the next panel will start right away.
Thank you.
thanks.